So tonight we're talking about performance since the start of 2024 because we're about a month and a few days into 2024. We've come off a bad year for the stock market in 2023. Please tell us that we have some good news for 2024. What's it looking like so far?
Yeah, man. All right. So I see the take a while ago went through some of the performance for the year so far. So I'm just going to share my screen and just go through some of the numbers for the year so far. So what are we looking at? All right. So first, started out to the junior market, right? So zoom in a bit here. So what you can see for the junior market in particular, we're down about 0.89% for the year. So not the best year, especially compared to some prior years. So you'd have to go back to 2020 to see a bad January for the junior market. So, I mean, down marginally, not so bad. Not the greatest, but not so bad for the year. All right, now let's move on now to the main market. Now, with the main market, we are seeing some positive movement. So the main market, now that started out the year up 0.85%. So that's way better than previous year. So 2023, that was down 4% in January. So you'd have to, and then 2020, not as good
Which
as
one of these
2022.
numbers are we looking at? I'm confused with all these numbers on the screen.
Oh, sorry, right here. I'm not sure if you can see the hand along this column here.
Where's your clicker? I can't see where your clicker is.
Oh, you're not seeing it. I guess it's too small.
Oh, yeah,
right.
I see it now.
Yeah, all right. So zoom in. All right. So zoom in up very aggressively. All right. So what you're looking at here, all right. So you're looking at January performance. So what you're seeing here is that we started the year positive. Now we compared to 2023, that was very negative. 2022, that was better than this year, but still. And then you'd have to go back several years. January is negative. So all things considered, this January not so bad, right? So now when you look at the combined market again, now the January column here, you can see a similar pattern of performance. So that's not bad in terms of a good start in January. Now, February just started. Well, February has been very good for the combined market, up 1.6%. So that's very good. Now, interestingly, when you look on the main market, right, what you're realizing is that going over the last 10 trading sessions, right? So what we're looking at here is like a bar chart that's showing, when it's above the zero line, is showing when the main market has had a positive performance, right? So for example, this bar chart here will be showing a negative performance in the market on this day. So over those 10 last 10 trading sessions, what you're realizing is that the market has been positive 9 out of those 10 trading sessions. So basically, the market has been really on a tear since that tail end of January going into February. Of course, we just started February, but it's doing pretty well on the main market side. Now,
all things considered, right?
All things considered. Now, the point that I'm trying to highlight here is when you're looking at the market and the broader context, what you're seeing is that yes, it's not bad. So January was positive on the combined. February just started. That's also very positive. But when you look underneath the and see some of the performance, so as you just highlighted earlier, you saw some strong performances for the year. But I'm going to touch on two of them in particular. So one of them first, WTON, right? So WTON is up 17% for the year. That's drastically outperforming the main market. So year to date, main market's up 2.6%, right? So that's doing very well. Now, what you're seeing with WTON when you zoom
17%, almost 18%. Nice.
Almost 18%. Not bad for period starting off the year, not a bad start at all, right? Now, zooming out a bit, what we see in WTON trading around 90 cents now. Now, there are several points in history that WTON has seen those levels. So WTON listed back in 2019, right? Now, it ran up earlier to in excess of $1. You can see that over here on the chart. I don't know if the viewers can see the arrow over here on the chart. They fell off, came back above the $90 mark and 90 cents mark, sorry. It's been a while, did so again in about mid-2023, and then now early 2024, you're seeing a similar pattern. It's getting above that 90 cents mark again. Now, the challenge here when you're just looking at these performances that we've been here before. Now, what we've seen from WTON is that WTON is doing a lot to try and boost profitability. If you look on the annual performance, Wigton's year end is March. When you look on their financial year performance, there is some volatility in those numbers. Different things, when availability, changes in expenses in terms of like finance costs and so there's volatility in the numbers, and it's kind of borne out in the stock price. You've seen them do some investments. So there was a recent announcement about some joint venture that they're doing in terms of supplying some solar panels and building out some infrastructure. So there's different things in the media that's probably helping to boost them in terms of, that sometimes when you have these announcements, it can drive investor sentiment. But interestingly, what's happening right now is that earnings season is around the corner. So of course, earnings season for a lot of these companies is going to be mid-February going into like early March. So mid-February, if your year end is not December, chances are you're going to be reporting mid-February. So as you can understand, most companies report 45 days after the year end, after the quarter ends, 60 days after the year ends. So there's a lot of companies that don't have their year end in December. So those companies, you're going to see a further earnings coming in February. So we see Wheaton is going to be one of those, because their year end, as I said before, is March. And then, so we're going to get more color around whether or not this rally is justified in terms of how the performance is and how the outlook is looking, right? So that's what we got for Wheaton. Another big performer is Jamaica. Now, of course, and I think you highlighted this again, is that Jamaica performed well in 2023. It was one of the best performers, up over 92%. And it's starting off 2024, with a bang, up 21%. Again, drastically outperforming the main market. It's doing very well. Interestingly, too, it's doing it on volume. So if you look on the volume, so what I tend to look at is not necessarily the volume traded in terms of the amount of units, but the value, meaning like the amount of money. Reason being is that, as you can understand, if 1 million units of Wigton trades, which is 90 cents, is not the same as 1 million units at NCB, which is currently at $60. So one is, about $1 million less. One is going to be 60 plus million, even though the number of units trading hands is the same, the dollar value is significantly different, right? So I tend to look on the dollar value in order to kind of normalize out the numbers. So when you look on Jamaica, what you're seeing is that is well over $8 million. Of course, 2024 is still young, but the average daily volume is looking at that, which is higher than the previous years. So there's a lot of activity in this rally. So it's not really a shallow rally, because sometimes you can have stocks rallying on like very thin volume. But what you're seeing with this rally is that there's a lot of volume trading hands in it, which says that persons they're very confident, for lack of a better word, in terms of the performance. So that is it for the presentation. So I think overall, what we're seeing is that one that I'm getting at is that while the overall market sometimes might be not looking that exciting, there's a lot that can be happening underneath the whole. Basically, when you're looking at the different companies that makes up the market, that can be some attractive opportunities, whether it be opportunities to probably take profits, whether it be opportunities to get into different names. There's a lot that happens on a day-to-day. It just might not show up at the index level. So you might see the market down 8% for the year, for argument's sake, and you have key names that are up like 50, 80%. So there's basically always opportunity. So the key is to just kind of keep an eye out, keep investing, even though the overall market might not look so hot, still got opportunities. So look for those opportunities.
Yeah. I have a question from the audience here. LBW wants to know, do you think TJH's volume points to institutional traders buying up stock?
I mean, that volume, like 8 million plus, definitely, there's a high chance that institutions are a part of it to move that kind of volume, because retail investors, in general, especially to get that average daily volume at that level, retail investors wouldn't be in the market with that kind of volume. It's like most retail investors wouldn't have that kind of money to spend, because again, unless they're running, very concentrated positions, that would be difficult to do. Because you can understand, if you have even a $10 million portfolio, which would be fairly significant, you put $8 million in one stock, that's very concentrated. But for a institutional investor, them putting even a $50 million position in a stock that can be, small, like 2-3%, even less of the portfolio. So the thing is, that does indicate that there's probably some institutional buyers in that mix. So I think it's fair to say that there might be some, but of course, you don't really know for sure, because when it's big enough, you can see, for example, the top 10 shareholders change. And if you have access to the data, maybe the top 100, but it's difficult to say for sure. But I think there's a good chance that there's some institution.
But all in all, look out for the gems on the market. And so far, TJH and Wigton, the two government-listed ones, are doing quite well. But overall, too, so another question coming from LBW, not really a question, an observation, says, hoping BOJ trends down interest rates probably won't happen this year because inflation is still trending up. Last I heard it was down, but who knows? What's the outlook on that point?
All right, so here's the thing. I've seen a lot of talk in the media about interest rates and the impact on the market. That is by and large true. Higher interest rates does create frictions on the market, because again, it's just opportunity cost. Investors looking and saying, all right, I can get this on relatively low risk. I can get 8-9%. So the view that attractive versus the market, especially when the market not really performing, it makes that choice even easier. So yeah, it is a fair point. That being said, though, I think particularly on the main market, I think there are some names that have been beaten down to a point where, despite the current interest rate environment, meaning interest rates being relatively high, compared to the lows, and they were granted historically, it's actually not that bad, but relatively high compared to the recent lows. Because of that, it creates friction. There's no denying that. But again, because some of the names have been beaten down so bad, I think there's some opportunities despite that. So, for example, if you look at some of the larger names that moved recently, if you look at Scotia, for example, I think that's up 20% year to date. February again just started. It's up big in February, trading around 45. A couple months ago, it traded as it was 30. That name in particular was trading like 6 times earnings. At one point, probably trading a little bit below book value. Of course, it has dividends, and of course, the recent earnings are phenomenal because the structure of Scotia, they're going to be a huge beneficiary of high interest rates. Huge beneficiary because of how their balance sheet is structured, the cash position and all of that. They're one of the biggest beneficiaries, right? They did very well because of the high interest rate environment, and then the stock, at least recently, definitely did very well. So yes, while I do agree that in the broader market context, it's going to be difficult to get, a lot of movement in the market. It's possible, but it's going to be difficult. Again, there are gems, there are particular companies that actually can benefit from the high interest rate or not be as impacted by it. So for example, like a food distributors that don't have a lot of debt, so that means they're not impacted by interest rates. And at the same time, because they're selling consumer staples, they can still generate increased revenue, increased profitability. Those companies might be in a good position. But yeah, in general, high interest rates are going to be problematic for them in general. Yes.
Well, thanks for those insights, Leo. You gave us a lot to think about here at the start of February, second month of the year.